Assembly Bill 188.
Thank you, Mr. Chair and members. First, I'd like to thank Chairman Bocanegra for organizing the informational hearing related to California's Prop 13 and allowing me to participate. I would like to thank all of you, the participants of the informational hearing, for their tireless work of educating our state on this topic. The bill before you today, AB 188, makes a simple change to our current tax system by requiring that commercial property be reassessed on their market value if 100% change of ownership occurs, just as it is true for residential property owners in California. Teachers and police are being laid off, children are being denied access to critical medical care, and struggling families are being forced to bear a large tax burden. It is appropriate that we close loopholes such as this, which benefit major corporations at the expense of both small businesses and the average California taxpayer. I respectfully request your positive consideration when when this item is taken up in suspense. With me today to testify, I have Linda Goldberg, Executive Director of the California Tax Reform Reform, and Kristen Boma of the California Professional Firefighters. Thank you.
Thank you, Mr. Damiano. Mr. Goldberg.
Yes, and thank you so much for the hearing last week. I think they covered many important issues. This one takes a very small piece of the problem, which is that 100% of a business changes ownership, and I can give you examples from ones that we've looked at, where the underlying structure of that purchase is very complex. So Toys R Us was bought by 3 private equity firms, a real estate investment trust, very complex underlying structure, but 100%, it was taken private by these firms, 100% was purchased. The business was sold. But it was not subject to reassessment because it was all virtually impossible to dig behind what the financial structure of the deal was. It was a number of different partners buying a property. And the mistake that was made in that currently exists in law, it says that 50 plus 1% of the property has to be purchased by one owner. So if Ms. Boma and Mr. Damiano and I formed an LLC and purchased the property, but none of us took 50 plus 1%. Unlike homeowners where it's on the deed, you have a complete change of ownership. This is the small problem, but one that causes a lot of problems for assessors or the BOE who can't figure out what's the underlying financial structure. So if 100% of a business changes ownership, we don't have to dig in and look at the complexities of the financial structure. That's all this bill does. And I'll give you one other example that everyone says is, we've used too many times, perhaps. But when Martini sold their entire winery to Gallo, a number of partners sold their shares to a number of other partners. 100% change of ownership. The Napa County assessor came out and said to the Assessors Association, shouldn't we deal with this problem? And that's what this bill does.
Thank you, Mr. Bowman.
Mr. Chair, members of the committee, Christy Baum representing the California Professional Firefighters. I might botch Mr. Goldberg's testimony up here, but we protect homes and businesses, and Grandma's home, she can't sell like her bathroom to someone and her living room to someone else and her family room to someone else and avoid 100% change of ownership, but instead suffer reassessment. So I would suggest that since many fire protection agencies in the state are fire districts who are almost 100% funded by property tax, they're getting choked off by these sorts of transactions. This is a very small change that will allow them to not only protect these business properties that need to remain viable in their communities, but also Grandma's house that can't be broken up and sold. We ask for your support.
Thank you very much. Any other witnesses in support of Assembly Bill 188? If you could state your name and your organization.
Monica Nestrosa with the California Federation of Teachers and Support.
Nan Braceberg, President of the California Alliance for Retired Americans. and we are in support.
Thank you, ma'am. Thank you for your time. Any other witnesses in support of Assembly Bill 188? Witnesses in opposition? You come please forward.
Thank you, Mr. Chair, members. Gina Rodriguez of the California Taxpayers Association, also representing just shy of 60 organizations and businesses that oppose AB 188. The bill represents an erosion to the Proposition 13 protections that voters approved for all Californians almost 35 years ago. The bill seeks to establish a split property tax rule by subjecting businesses to more frequent reassessments for their commercial, industrial, and residential rental property. This is inconsistent with the philosophy of Prop 13, which was taxpayers' collective response to dramatic increases in property tax and which passed with 65% of the vote. Besides capping the property tax rate, limiting the annual assessment increase, and establishing vote thresholds, Prop 13 also converted the property tax base from a market value system to an acquisition value system. With the acquisition value system, Prop 13 removed much of the fluctuation of property tax revenue, creating a more stable revenue source for local government. Prop 13 has been successful at what it promised to do. It prevented people from being taxed out of their homes and their businesses, and for the first time, it gave all taxpayers a measure of certainty over their property taxes. It did this by replacing the subjective standard of property taxation to an objective one. It was the subjective standard that contributed to major assessor scandals in the 1960s prior to Prop 13. The San Francisco and Alameda County assessors went to jail. The San Diego County assessor facing indictment committed suicide. Under Prop 13, property taxes have been the most reliable tax in California, growing steadily year after year. In fact, property taxes have exceeded growth in inflation and population combined. From 1979 to 2012, the average annual growth of assessed value for locally assessed business and non-homeowner real property has outpaced the growth of homeowner-occupied property, 7.5% to 7.2%. For the past several years, there's been an outrage over dysfunctional property tax systems in many states. Indiana saw protests and picketing. Florida's situation was covered in Time magazine. Property tax initiatives have been filed in many states, including our neighbors in Arizona, Washington, and Nevada. But in California, there has been property tax peace, as people are satisfied with this system. To close, I'd like to tell you a story about one local school board's actions after the passage of Prop 13. The San Juan Unified School District voted 4-1 to join the lawsuits challenging Prop 13. Within 5 months, all 4 of the school board members that voted to join the lawsuit were recalled. The lone no vote was cast by David Dorr, school board member, consultant to this committee for 24 years, chief tax consultant to Caltax for the last 26 years, and chairman of the task force that implemented Prop 13. Ask for your no vote.
Please, next witness, 2 minutes.
Good afternoon. My name is Kelly Titt on behalf of Tech America. We're in opposition to AB 188. Tech America is a national technology association made up of approximately 600 to 700 members, nearly half of which are located in California. The technology industry has had a significant positive impact on the California economy and leads the nation in both high-tech employment and average wage. According to the Tech America Foundation's most recent Cyberspace report, 78 out of every 1,000 private sector workers in California were employed by high-tech firms with an average annual salary of over $110,000. There are nearly 42,000 high-tech establishments in California with a combined total of $102.9 million in annual payroll. The technology industry adds significantly to California's economy through employment, sales tax collected from product sales, and by creating and offering new and innovative products to the people of the state. Proposition 13 was approved by California voters to create stability for both non-residential and residential property owners. The technology industry was born in California, and we want to stay in California. Our industry faces extreme competition and rapid technological advancements that result in compressed research cycles and product lives. In today's fiscal climate, Technology companies must compare their operational costs to other locations globally. Companies take several things into consideration when choosing where to expand, and Proposition 13 is one of the few certainties technology companies in California have when doing so. The technology industry is a bright spot in California's economy, and we need to start playing offense to keep these companies and jobs here. Thank you very much, and we urge you to vote no.
Thank you very much for your testimony. If the next few witnesses would give their name and their organization they were representing.
Mr. Chair, members, Matt Hart with the California Business Properties Association. And if I could just address the issue of the examples that were given today. One of them is almost a 20-year-old example. If this is actually happening as much as the proponents claim, we would have some newer examples. And the Toys R Us example, that was testified to in this committee 2 hearings ago, and that was shown to be an issue where Toys R Us does not own the property in which many of their buildings are located. Therefore, it's not a triggerable reassessment when the company is sold, because those properties are owned by my members who own the shopping malls and those different properties. So with that, I'd just like to express our opposition to this bill. Thank you.
Mr. Wolf, please.
Yes, Mr. Chairman, members, good afternoon. David Wolf with the Howard Jarvis Taxpayers Association. We're opposed to the bill.
Next witness. I was thinking you Mr. James microphone.
Ron Kingston, representing the Apartment Association, California Southern Cities, NorCal Rental Property Association, San Francisco Association of Realtors, and East Bay Rental Housing Association.
Thank you.
Jennifer Guerra, on behalf of California Chamber of Commerce, for having us today. This is one of our doctors in Maryland.
Please.
Les Shepard, representing the Silicon Valley Leadership Group in opposition. Nicola Benson, on behalf of California Chamber, Asian Pacific Chamber of Commerce, also in opposition.
Thank you.
Mr. Chair, Chris McKinley on behalf of the California Grocers Association, also opposed.
Mr. Chair, members, Frank DeLima on behalf of the California Building Industry Association in opposition.
Chairman John Kabatak, the Executive Director of the National Federation of Independent Business. We represent about 22,000 small businesses in California. In opposition, keep in mind, most businesses in California are small businesses, and small businesses create 2/3 of all net new jobs. This is not a hit to the big businesses. This trickles down to those who rent, most of which who rent in California, and that passes on to the customers and jobs. So thank you very much. We're in opposition.
Thank you. Next witness, please.
Ron Schwab for the Apartment Association of Orange County in opposition.
Catherine Ward with the Western Manufacturing Housing Communities in opposition.
Thank you.
Mr. Chair, member Bernie Roscoe on behalf of the California Cable and Telecommunications Association.
Any other witnesses in opposition to this measure? I'd like to open it up to questions from the committee. Mr. Stoller.
Thank you, Mr. Chairman. Who's going to regulate, when you have a property sale, you have a deed change, you know, the assessor knows when that takes place, but how are you going to regulate? Who's going to be the one that regulates whether or not, or figures out whether there's going to be a stock change?
I think that's in the purview of the assessor, and I think that this bill, which many people in opposition do not speak to, by the way, simply closes a loophole that we've established through a legislative process, not by the rule of the voters. And Mr. Goldberg wanted to.
You know, there is a program at the Board of Equalization in which they are supposed to identify those changes of ownership, big picture, like buying corporate buyouts, that then they send their information to the assessors. Now, we've looked at a number of those, and the companies are able to legally make arguments such that when one company bought another company, it was not even complicated. Caremark bought Long's Drugs. They created an LLC, Long's Drugs LLC, and it was only the assessors who found out about this. Somehow, because they had kept the name, the Board of Equalization had to notify the assessors. Now, those did get reassessed because it was 100% without any complexity to it. When it gets more complex, the Board of Equalization, which is supposed to notify the assessors that these changes have taken place, don't know what the underlying financial structure of the deal is. So they're not necessarily informing the assessors. That's where it's very complex to figure out what is the structure of the deal.
So how are they going to accomplish that?
Well, with this bill, they don't need to figure that out. That's precisely the point. With this bill, they just say there's 100% purchase of a company. Whatever the underlying financial structure, it's a 100% buyout. So we don't have to figure out what the underlying, and listen to the attorneys. We know this happened with some of the bank mergers. The attorneys were saying this really wasn't a takeover. The assessors figured this one out before the Board of Equalization. But it's very complex, and this just says, if you sell a company, like selling a house, we're all on, we have a level playing field.
Mr. Dolly, if you wouldn't like to indulge me for a second, I'd like to move the discussion along to a former assessor, Mr. King.
As a former San Francisco assessor, others of my predecessors went to jail. I got sentenced to work between 2 to 12 years. So we'll see who's better off. So, but just to answer Mr. Dolly's question, on every state tax form, when you file your taxes, there's a box that you check to say whether or not you purchased a piece of real estate. What happens then is, if that box is checked from a corporate point of view, it goes to the State Board of Equalization. The Board of Equalization determines at that point whether there was it's called a legal entity ownership program, whether there was a change of ownership, at which point they allow and let all the other 58 counties know that someone in their jurisdiction might not have. So, for example, if Home Depot says they purchased property, they check the box, it goes to the State Board of Equalization. The State Board of Equalization lets the entire state know. It's something very, very standard. I'm a little bit sort of puzzled by the huge amount of opposition today. In fact, this particular example impacts probably less than 1% of all property transactions here in the state. Additionally, what this does is it closes a loophole. Second, it actually does away with the split roll, because the split roll by definition, when you treat commercial property owners different from residential property owners. And what's very, very interesting is that pretty much almost no homeowner would form, if me, my wife, and my mom formed 3 separate corporations and we bought 3 other partners out, happen to have equal shares of a residential piece of property, that, according to this, would avoid reassessment. But almost nobody who purchases residential property to live in would ever do that. So by definition, this is actually allowing a loophole that currently exists that treats commercial property owners differently to avoid reassessment than residential property owners. And again, this is happening on such, I think one of the speakers mentioned that this is not happening very often. So again, and I would agree. So this is a small loophole that's being closed. It's very limited, actually. Mr. Damiano has even shrunk it further. I would have said 50% threshold would have made more sense, but he said 100%. 50% is what we do the rest of the time, 100%, and only, I believe, is for mergers and acquisitions, so it's even smaller. So again, I think it's a very common sense loophole to actually treat these transactions similar to the way we get treated as homeowners.
Thank you, Mr. King. Any other questions from the committee? Mrs. Golly, did you have any follow-up questions? You're fine. Mr. Almeida, would you like to close?
I guess I'm shrinking, but I would appreciate a positive response when this comes up for consideration and removal from this. Thank you very much for the questions.
Thank you for your time. Look forward to working with you. I'd like to now